Let's have a look at offshore funding holding vehicles. The Special Purpose Vehicle, abbreviated as SPV, is very popular for capital structures and especially with overseas property funders. Lombardi and Kershaw list the following holding advantages for Channel Islands offshore funding. Regulation arrangements. In comparison with other offshore jurisdictions, the regulatory and legislation rules are held in high esteem by many funders, taking into account the added quality and comfort levels for property investors. When setting up a unit trust, company, or a limited partnership, regulatory approvals will be required, corresponding to the domestic management of borrowing legislation. Such regulation is carried out via the relevant financial services commissions, who deal with the raising of capital and corporate securities issues and hold interests in unit trusts or limited partnerships. Nonetheless, receipt of the regulatory approval can be just a technicality if the SPV is to be used as a private funding holding vehicle. Investment fund arrangements, which fund real estate, land, and others. In cases where the purchase of land or other property assets are to be funded by raising public securities, the SPV can be arranged like an investment or private equity fund. Such arrangement would need local regulatory approval by the commission that will consider the status, as well as the capital management skills of the SPV's marketers, including the degree of guarantee provided to funders. The essence of any proposing document will need the Commission's consent, which may decide to evaluate other primary sets of documentation. The Jersey Property Unit Trusts and Guernsey Property Unit Trusts are quite common as a joint investment SPV and certainly as a substitute to limited partnerships. The offshore property unit trusts have in recent years become like small real estate opportunistic funds for overseas investors, rather than real and unprotected joint venture structures. Taxation. This issue seems to be one of the most important factors affecting the preference of choosing the SPV structure and place of registration. As long as the SPV's residence can be proved to be beyond the UK borders, and notwithstanding whether the chosen SPV is to be registered in Channel Islands, such as an open-ended or closed-ended corporate vehicle, company, a limited partnership, or a unit trust, in most cases the SPV will have no taxes, no withholding tax forced on any dividend, no capital gains tax, no corporation income tax, no profits tax, no stamp duty, no value-added tax, no other disbursement affected by the SPV, and no inheritance tax or withholding tax appropriate in the Channel Islands or to their relevant shareholders, unit holders, as well as partners. In addition, there is also no stamp duty payable domestically on the shares, units, and partnership interests transfer, and no annual taxes or charges in relation to authorized corporate and issued share capital. Channel Islands Securities Exchange. The Channel Islands Stock Exchange serves the international finance centers of Jersey and Guernsey, as well as offering professional and capital-raising possibilities for registering investment funds there. Among the benefits of attracting funders via this channel are superior fund promotions, as well as the 24/7 online visibility of investors and profiles. In addition, the Channel Islands stock market is selected by the UK HMRC in accordance with the Income and Corporation Taxes Act 1988 as an acknowledged stock exchange. Also, the U.S. Securities and Exchange Commission, in accordance with Regulation S of the Securities Act of 1933, has nominated the Channel Islands Stock Exchange as an accreditation category. Jersey Island Arrangements. As to Jersey-registered SPVs, if such fund is promoted to more than 50 funders, in this situation the legislation requirements with regard to collective investment funds should be obeyed, especially where the fund and any individual who offers administration, custodial, managerial, as well as other operations either inside or outside the island to the fund will need consent from the Commission. Various matters will have to be considered with regard to provisions of the 1998 Jersey Financial Services Law. Anyone who deals with investments or performs investment management, as well as advisory activities in islands, should be signed up in accordance with the legislation and/or can benefit from those exemptions. In other words, such rule relaxations provide advantageous situations for individuals being approved in accordance with the collective investment funds legislation and for individuals who offer services for regulated schemes in connection with professional investors. In particular, close attention should be paid to the situation regarding a general partner or manager of an SPV, such as a unit trust, a limited partnership, or a company. Guernsey Island arrangements. Having lots of similarities with Jersey Island, the arrangements from Guernsey's perspective include various funders supporting legislation. For example, the Protection of Investors Law manages collective investment schemes abbreviated as CIS regardless of how many funders invested. The CIS are to be approved by the Commission and anyone who would like to carry out administrative or management services, custodial and other roles in connection with the fund's activity will have to obtain a permitting certificate from the Commission too. Another possibility for SPV structure arrangements for indirect funding into property development also available in Guernsey is setting up a protected cell company abbreviated as PCC. Guernsey pioneered it and was the first jurisdiction introducing this sort of SPV in 1997. This funding structure is recommended for a smaller number of funders. Optimum is for less than 8 investors. The PCC is a typical sole limited company, which can be divided into legally separate cells. The liabilities, profit, and assets of each cell are distinct from all other cells. Every cell contains its own detached segment of the PCC's total share fund, which permits investors to keep private rights of a whole cell, although holding only a small part of the PCC in total. The PCC is appropriate for both domiciled and non-domiciled individuals, as well as for UK resident and non-UK resident individuals. The PCC can mitigate stamp duty, land tax, inheritance tax, capital gains tax, and can be used for both commercial and residential property. As to an exit strategy, a cell can quit its activity anytime, having various tax advantages. The main benefit of the PCC is that lenders to a cell cannot get recourse against the assets assigned to other cells, as well as to the core assets. In other words, the assets of each cell and the core are separately protected. This allows a few of property portfolios to be created in one company, small fund with no risk of claims among other asset classes. Figure 27 shows comparisons among the most popular property SPVs and jurisdictions, focusing on the UK, Europe acting as feeder funds into UK limited partnerships as an example. Now, let's have a look at real estate private equity funding. Real estate private equity funds are indeed among the leading sources and structures for development finance. Such funds attract capital, source and qualify investment opportunities, structure finance, and provide necessary funds for property development and investment requirements to develop, construct, refurbish, and operate properties efficiently and provide effective exit strategies, along with recycled capital within such funds. Figure 28 shows how important the UK market for private equity fund investment is with its operational concentration in comparison with other countries. Real estate private equity funds typically fund at any property stage and segregate into various separate categories, covering business operations at numerous modes in their growth, from acquiring land until selling the property. As to the structuring vehicle, the limited partnerships are the most typical SPVs. Such funds are commonly closed-ended entities, where investors are locked in and prevented from withdrawing their capital for 5 to 10 years. Fundraising and fund managers are severely regulated themselves, although private equity funds are normally unregulated collective investment schemes and hence such structures are not subject to authorization from the UK Financial Conduct Authority. However, funds established and operated in the UK must have an authorized portfolio manager, and yet there are certain exemptions in communicating investment professionals. Figure 29 provides common operational fund terms with comments on them. From an overseas funding perspective for UK and European property development and investment, Blake and Robinson demonstrate in Figure 30 a sample of a common European private equity limited partnership formation. In terms of funding structuring, the limited partnerships and other local structures specific to European countries, in a way that French tax authorities, do not recognize an LP as a tax-transparent structure, and this has turned out to a successful capital tool for pan-European management groups funding elsewhere in international real estate. Typically, funds are classified into property funding patterns that ascertain the funder's categories and classes of capital assets appropriate to each SPV in accordance with their return criteria. For example, targets internal rate of return, level of gearing, and level of risk. Following such pattern, for example, an opportunistic fund can be set up in the residential sector to take development risks and to realize future capital growth, usually over a period of 5 years. As a result, the investment cycle shortens, gets riskier, and aims for higher returns, for example 20% or more. Figure 31 shows the SPV funding pattern definitions provided by European Association for Investors in Non-Listed Real Estate Vehicles. Traditionally, the UK private equity market has been a domestic place invested in by international fund managers. Majority funds were restricted to funding in UK companies. Nowadays, the largest private equity funds have been active in a market financed by overseas funders, and the UK private equity market is the next largest one worldwide after the US. Property developers and real estate stakeholders may consider such source of equity finance as investment, and the property market by the UK fund management sector has seen an upturn, and they are more confident in their decisions. The rise in assets under management has become far bigger than the equivalent IPD capital value growth figure of 1.3%, meaning that the property market has been given a boost. According to the Estates Gazette, the fund managers now look at property yield and capital growth more favorably. They have begun deploying the capital in the real estate sector again. Figure 32 shows the fund managers list active in the real estate market. As to development finance structures, developers as well funders who look to engage in development projects use various types of SPVs, depending on individual requirements. The structures include joint venture arrangements, usually on the basis of 50-50 profit sharing, limited partnerships, limited companies, both private UK or overseas investor formations, which take into account corporate finance requirements, debt, project, and equity funding. Such funding structures, which developers and funders create, are strictly private and extremely confidential, and for obvious reasons cannot be revealed here. Nonetheless, as the summary of the overviewed funding structures shown earlier demonstrates, Figure 38 contrasts popular UK SPVs for funding purposes. Figure 39 compares indirect SPVs. Both figures are aimed at evaluating various funding structures, but from slightly different angles. Finally, Figure 40 details the funding matrix summary, which sums up and ticks regulatory and taxation requirements with regards to possible capital structures used for real estate development finance and subsequently for property investment activities. If you enjoyed the video, please like it and subscribe to our Properties Jointly YouTube channel. Please also share our videos among your social media circle and leave your comments with wishes of which topics you might be interested in. Your support is very much appreciated and will help with the YouTube distribution algorithm.